once the printing starts this time, I think we're going to see gold and silver, especially silver, really start to move like in ways that are going to be scary even for stackers.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for August 4th through August 11th, 2025, while supplies last. First this week, backdated 1-ounce Canadian silver maples are just $2.89 over spot, the lowest premium we've seen on maples in years. Next, backdated 1/10-ounce Platinum Britannia are only $34 over melt per coin. Backdated gold 1-ounce Britannia are just $59 over spot per ounce. And finally, 100-ounce PAMP silver bars are only $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and back with us today is our good friend Rafi Farber from the Endgame Investor on Substack. Rafi, thank you so much for joining us today.
Hey Elijah, good to be back again.
Well, it's great to have you today. I did want to discuss, as we see gold over the weekend, we saw a pullback, into the weekend, but now coming out, we're seeing gold and silver. It seems to be rallying again. But I did want to get your perspective because it seems like for gold, we've been going sideways and consolidating for quite a few months now. And you've been writing that we could be, back on the saddle here again, going higher because it's really been a 4-month consolidation. And this has been significant in the past. Can you expand on that?
Yeah, well, since 2024, I think the beginning of 2024, we've had a few consolidations in gold. There are many different ways to count a consolidation. You can debate where you want to start counting, where you want to stop counting. But if we just take just a general idea of what a consolidation is, the price doesn't go beyond a previous high, then the average length of a consolidation since 2024 has been about 4 months. There's been one that was 3 months. And usually the rallies are between 1 and 2 months. So the rallies are shorter in time span than the consolidations. That's how it's been. Doesn't mean that's how it always will be or that's how it necessarily will be this time. But nothing fundamental really has changed since the beginning of 2024. We're still operating on the leftover printing from 2020. We're almost out now, finally. But we're still operating on that. So it's the same basic monetary structure. So, based on that, it just seems like there's a good chance here that the consolidation in gold is pretty much over. And once we pass 3,500, we should start seeing the next rally, which shouldn't take too long in time span. It should be about 1 or 2 months until we get to a new plateau. Could be 4,000, could be higher than that. It's hard to tell exactly where it'll stop. But in the meantime, we also have to look out for the end of the last tranche of 2020-2021 printing, money printed fuel. And because we have now still about $100 billion left in reverse repos, which is the backup money supply that comes in every so often, that's still going to run out. And when it does, the Fed is going to have to print again because all of the extra reserves are still being used in the plumbing of the system, and they can't be double booked. They can only go in one direction. And all of the hedge funds and everything like that uses that money, they need that to keep coming or they have to close their trades, and that could cause a systemic toppling. So before that runs out, we should see gold start to rally, and I'm not discounting that gold and silver will get hit, perhaps severely, though less severely than most other things. In the event of some kind of a clog in the plumbing, but that's only going to be a few days until the Fed responds, and then we should see a slingshot. So I'm not counting that as part of the trendy consolidation versus rally. That's something else. Like, for example, if you look at 2020, like February, March, April 2020 in gold, it was a humongous dip, and it was one of the worst dips in history for gold stocks. But if you look on a chart that's 5 years or longer, you don't even see it. It's not even there because it was so short. This one's going to be even shorter. It's going to be very scary, but it's going to be shorter.
So do you see possibly an even greater pullback happening soon?
I don't know how big it's going to be. In terms of percentage, well, I think gold was like 25% from the top, maybe in February 2020 or early March 2020 to wherever it stopped at 1450. I think it was like maybe 1800 down to 1450. What percentage is that? It's something like 25% and I don't think I'm wildly off there. I'm just not doing the math in my head. So, I mean, we could see something like that. What's 25% of, let's say, 3,600, about $700 down. So could I see a crash in gold to like maybe 2,800, 2,900 and real panic on a repo crunch? Yeah, it's possible. But, most of my positions were established way before 2,800. So, unlike 2020, which really got me, my heart pumping in a bad way and, sweating, I held on. But this one, it would be like, a little bit, like a mild roller coaster, like something I could handle. And I'm sure most of your followers could handle it too if they got in before 2,800. So it'll be difficult, but it won't be a 25% dip from here wouldn't affect most of the stackers as, a 25% did from 1,800 to 1,450. So it could be a similar breadth or a similar move percentage wise, but I don't think the stackers are going to be fooled like they were last time.
And can you expand on explain a bit more about the mechanics of the coming potential repo crisis? So you talked about how if the repo market really dries up, then that could trigger margin calls, which trigger selling of assets, and then that's the systemic risk out there. So can you tell us a bit about kind of the mechanics behind this crisis?
So from what I understand, and I queried some AI on this just to make sure I'm right. I don't use them for my primary research, but I check my conclusions with AI to see if there's something wrong with them. So this checked out, at least. So if you imagine what's happening in a margin trade, when let's say an institutional trader wants to increase his position for his clients, so he borrows on margin from the broker. The broker's got to get the dollars from somewhere. The broker gets it from the bank. The bank gets it from the repo market, at least, about half the time. So what happens is ultimately you have this loan that's secured by equities by the client to the broker, right? The broker pledges his securities, which he still owns, but the broker maintains his right to sell those securities by force if the margin loan can't be paid in time, if it gets called in. So that puts the client of the broker in danger of having his stocks force sold. And the broker itself has to pledge those securities to the bank, right? The same securities that the client pledged in, ultimately they're pledged to the bank. So the bank has to sell, it's really not up to the broker. The broker is just a middleman. The bank has to sell the securities so it doesn't get its dollars back. But where does the bank get its dollars? It gets its dollars from the repo market, for which the bank that's giving dollars ultimately lends the repo market every night treasury securities. So these margin positions are ultimately dependent on the treasury securities that are pawned off to the repo market to another bank to secure the dollars that some other bank has in reserve. So since people are always asking for more and more margin, as we see, I think Andy Schefman talked about this you interviewed him recently, and he was talking about how margin loans have exceeded $1 trillion. There's no significance of $1 trillion other than that we're base 10 humans because we have 10 fingers and 10 toes. So 1 trillion is a psychological number for us. But what's more significant is that the rate of increase in margin, the amount of margin debt outstanding that's ultimately secured by treasury securities, right? That the rate of that has been going up and up. The acceleration has been going higher and higher, and we've had 2 months of, I think, above 15% monthly acceleration, which you only had, I think, once in 2000, or 2 months consecutive 15% or higher, something like that. I know it's in the double digits, and it's among the highest months of acceleration in margin debt ever. So what happens is if the dollars run out in the repo market, right, and then the amount of interest that you have to pay, because it's supply and demand. If there's more demand for the dollars than there's dollars available, the interest on those dollars has to rise. And that means that ultimately the client that's taking the margin, right, he has to pay higher interest rates. If he can't pay them, right, in order to pay them, you have to, because he has no cash in his account, otherwise he would be trading on margin. He's already fully positioned, so he can't pay those suddenly spiking interest rates. And then the broker gets called in by the bank, like, you have to pay me that interest because we're having a repo clog here, and the interest is going up on those daily, nightly repo loans. So you have to sell those positions and pay that interest. And then the bank said, but if everyone's doing that, everyone has to sell the positions, the value of the stocks that they bought on this margin loan are going to go down together because everyone has to sell it, pay the interest rates. Right? And then if the value goes down enough, then if it goes down enough, then they can't pay back the margin loan itself, the principal. If the value of the stock's being pawned off for the margin rate for the margin loan in the first place can't be pawned off, and then the bank itself gets in trouble because the bank is the one that pawned off the treasuries in order to get the cash in the first place to give to the broker to give to the client. So if the bank's treasuries get forced sold, so the bank has to sell those securities plus some of its securities that they secured with the other bank to get the dollars, then you have a whole bunch of treasuries being forced sold at the market in order to pay back these margin loans. So what you have is eventually, if it's allowed to go on long enough, let's say a few days or a week or two, which I don't think it's going to last that long because the Fed's not going to allow it, then you have the situation of stock positions being forced sold to pay back repo margin loans. And if the value is not enough because everyone's selling, then a lot of treasuries get sold in order to cover the repo loans where the stock values can't plug in the hole. So you have rising interest rates, short-term interest rates on the repo market, plus rising long-term interest rates if treasuries are being repossessed in order to pay back these repo loans, and everything's falling at the same time, which would include gold and silver and everything except the US dollar itself very temporarily until the Fed steps in, which is what it's going to have to do.
It seems like this is kind of a repeat in some sense of what we've seen in the past, like you said, in 2020 or 2008, where we see metals fall because of, people getting margin calls and all of that. So if it's just kind of a collapse of everything, it again just kind of seems like we're in for a repeat of 2008 or 2020, but maybe this time, how do you think this time is going to differ? Is it going to be worse than those two other crashes?
And it could go either way. I don't know how it's going to play out, but I do have a strong feeling this is going to be the last time. As you go down the fiat process, crashes get closer and tend to get more intense. But the intensity also, on the one side, yes, they do get more intense. On the other side, the Fed becomes more aware that it's going to have to act sooner and sooner following any kind of sign of stress, which is what we saw in 2019 and in 2020. And I think we're going to see it again. So we're going to see some kind of intense move, but we're also going to see the Fed act very quickly, where in 2008, it took them maybe, a few months. It depends where you count where the stress started. You could count it years, starting with the top in the real estate market in 2006. You could start it with the excess reserves or whatever they were doing in the banking system in 2007, where they allowed the Fed to pay interest on excess reserves. See, most people don't know that entire process, that entire a set of rules was only instituted once the banks told Congress, look, we need the Fed to be able to pay interest on excess reserves to keep all these reserves out of the monetary system because otherwise everything's going to explode. That actually happened before the financial crisis even happened. So you count it in many different ways, but however you count it, it took the Fed some appreciable amount of time to really get moving. Right? In 2019, it was much less. It was like they saw repo going up and up for maybe a week or two before they moved. And then they only moved when it really spiked. And in 2020, they acted immediately. The Congress or whoever was in charge of locking down the planet said, look, we're going to do this. And the Fed says, okay, we'll print $4 trillion like in the next day, or 2, 3, 4 days, whatever it was. So it's going to be very quick, but it's going to be very extreme. In terms of will it be felt in the stock market, I don't think for beyond a day or two in terms of nominal values, but once the printing starts this time, I think we're going to see gold and silver, especially silver, really start to move like in ways that are going to be scary even for stackers. Because if you put yourself in our situation, in order for silver to, let's say, move like 20-30% a day, right? When that happens, we're going to see some really scary stuff happen in the equity markets, happen in the bond markets. Prices, oil is going to start heading up. Commodities are going to start heading up, not as fast as gold and silver, but they're going to start heading up very scary. And we're going to feel like, happy, but, worried at the same time. That's when we know that we're really close. When our happiness is tempered by our own fear, even if we're in a good situation financially, which is, once you start feeling that, you'll know we're almost there. And I think that's going to start to be felt once the next printing round begins, whenever the last bits of monetary stimulus from 2020 finally run out. Should be in a few weeks now.
What kind of repercussions do you see this having on our lives? So there's the markets, right? The average person might be slightly disconnected from what the stock market is doing, right? And what precious metals are doing. So if we do see gold and silver making these huge moves in the stock market, maybe crashing or high inflation, what sort of impact do you see that having on the average person and maybe the people outside of, the stacking world?
A lot of people on the margins are going to lose their jobs. I'm in the US now, and I'm seeing really concentrated trends in certain industries that are kind of scary. if you think about them, like every billboard that I see is, some kind of, not every single one, but like, so let's say, 50-60% of all billboards as I drive on the highways, they're about, there's this big amount of money, let's say $500,000, and some injury attorney, you're talking about how he can sue for you. I hear these ads on the radio nonstop about the same thing. Everything's concentrated now. All the money's concentrated in insurance claims and accidents and injury claims and whatever. All this is where all the big inflation is going, or part of it. So when you have a society that's so concentrated in these very specific areas that are not very productive, all of that money goes away, and you have all these people in these very inflated industries that are suddenly unemployed, and they have nowhere to go because there's no demand for their services anymore. Right. So the people that are in the very concentrated inflation influenced areas, like litigation, that's one of the reasons we have such a litigious society, and securitization. Right. I'm reading a book now about how the CMBS market, the commercial mortgage-backed securities market, is structured, and how much employment that feeds. So you have these. Basically, any profession that's involved in moving paper around to kajigger a refinancing of something to keep a pyramid going, basically somewhere in the structure, they're going to have to find something else to do. And most of them don't have any practical skill how to do anything other than, manipulate the system in some way that right now is profitable. So those professional classes are going to get really hit. People with skills they're also going to get hit if they have, minimum wage jobs now just to keep going. But if they have skills, their skills will be in demand from somewhere. I don't know what their standard of living is going to be, but they'll probably be in better situation than people who have no skills other than pushing around big piles of mortgages, to try to get him more time to pay his loan. Bankers, that sort of thing. So these people are going to be in I hope not dire straits. I hope they have some real savings, but if they don't, they're going to be in trouble. And people that are living hand to mouth now, if they have skills, they'll probably move up a little bit, because the inflation is killing them. And once the hyperinflation comes, the inflation is over and they can start rebuilding. So yeah, there's going to be a period of difficulty for them, but it's going to be easier for them than, let's say, a hotshot banker that has no skill in how to do anything.
I mean, that gets back to what we've talked about before, is really developing skills and also community as well. And kind of just going back to the basics is really important things to do. Besides, we focus a lot on this channel about stacking precious metals, preparing for what's coming in a financial way, but really building yourself as a person, I think, is really important as well.
Yeah. It's important for a society. Not just, what is the society and the collection of its people? And society doesn't know how to what is moving it. And you look around at this humongous system, it's like, how does this all work? And I can't answer that either. I have no idea. Other than I'm just focusing on teaching my children how to work with their hands, how to sew. They know how to crochet, how to create things, just to give them confidence and using their hands. My daughter might be the only one in her class. She's in second grade, the only one who knows how to tie her shoe. And I have because there's no shoelaces on shoes anymore for kids. You try to find one. We were trying to find shoes her size, the shoelaces on them. We couldn't find them because nobody knows how to tie shoes anymore. And I have nieces and nephews that are older than her, like maybe 10, 11 years old, that told me they don't know how to tie shoes because they never had to do it, right? And I'll tell you this, like my wife teaches gymnastics, or tries to, but she just realized after a year or two of trying to do this that children actually lack, in this generation, in Israel I'm talking about, I don't know what it's like in the US, maybe you've seen this too, they lack the ability to even understand that following directions is a thing that you have to do, because if there are no consequences to actions, parents just don't discipline their children, even in the most basic way. I'm talking about hitting, I'm just talking about on saying this, you do it, right? If you don't have that, you don't have the ability, even if you wanted to basically follow directions and do what an authority figure is telling you to do. Now, I'm not saying all children have to listen to authority at all times. Obviously not, if they're saying or doing the wrong thing. But the basic skill of being able to follow directions is now, the fact that we're naming it executive function means that it's not taken for granted that you even know how to do these things. So now my wife is trying to figure out, how do you teach kids the ability to even follow directions? Like, she's saying something, therefore you follow it. Even that logical connection is not there. How do you do that without the ability to impose consequences on the kids in your group? Like, okay, you didn't come with a leotard, so you can't participate today. She can't do that because she'll get fired. It's impossible. So, we have problems even deeper than people don't have any skills, or kids can't do anything. It's that kids don't even have, beyond that, the ability to understand that following directions is a thing.
And it is interesting how, like, this idea of maybe getting a free lunch or being able to do whatever you want to do, a lot of that is reflected in the monetary system. And you've talked about this before, how really a lot of this moral degeneracy, right? Maybe not, obviously there's a small element of it in kids not following rules, right? But obviously in adulthood also there's graver consequences there. So your perspective on that, how the kind of the morality of a society also is reflected, or is a reflection of how the monetary system is run.
Yeah, well, you could just take the most basic example of bailouts. Everything the Fed does is by definition a bailout, because they create claims on gold that doesn't exist and give it to people so that they can spend. Whatever the Fed does is a bailout. It just comes in bigger or smaller chunks. So basically, a bank can do whatever it wants, and it might experience some minor consequence somewhere. You have a headline, Wells Fargo paid $2 billion in fines for spoofing, or whatever it is. And then, the article goes into what spoofing is and why it's immoral. But then again, the entire banking system is being bailed out every day by the Fed providing whatever it is on the back end. It's just that we see it more in chunks when it happens in a bigger way, like we saw in 2008, like we saw in 2019, like we saw in 2020. Like they could shut down the entire planet without consequence. Not without consequence. There will be consequences, but you can delay them with inflation, or you can spread them out over a longer period of time with inflation, so they're less noticeable. right? If there was no Fed and there were lockdowns, people would starve within days. And that didn't happen because of the money that was printed that could just flow through the system and keep it sort of kind of working so that nobody starved to death. But yeah, so if we're going to take the example of executive function with children, the bankers today, they don't even realize, they don't even know that what they're doing is, most of them don't know that what they're doing is wrong morally. They don't know what money even is anymore. They're proud of how they are handling the current pyramidal structure, which if you listen to the details of it and listen to them explain, some of them are very smart people, and most of them they're not nefarious people individually. They're not trying to hurt anybody. They're just doing what they see as the system and they're trying to keep it in balance. So that's what they're supposed to do, but they don't know that it's wrong. Just like kids don't have an executive function because they were never taught what following directions is. Bankers don't know what they're doing because they've never been taught what money is. It's the same thing. It's just one is the entire society, the entire economic structure, and the other is one child who was never taught by his parents to listen to what they say.
And as we move into the end game, which is what your Substack is all about, really helping people prepare and, getting ready for this crisis, as we go into it and come out the other side, what is your hope, I guess, for society in general, where this, sometimes it seems like when people are doing the wrong thing, right, they just need to be hit over the head with reality, right? And then that might be what is coming on a financial level. Did you want to speak a bit about that?
Yeah, that is what's coming on a financial level. And I would hope that there are enough people in society, and we are at the head of it. We are at the head of that class as not just stackers, but anyone involved in anything real. There are still plenty of those people left. It's just that the people that are involved in stacking paper in the right way so the pyramid doesn't fall over, they take the headlines. It's like, technically, I guess the mainstream media is in charge of the narrative, but nobody listens to them anymore. So, there's still a lot of people thirsting for truth out there. I'm very optimistic. I'm not saying that everyone is going to survive this, but I do think that we have enough people who understand what reality is, or basically understand. I'm not saying they have any sophisticated theories or they can cite, the entire structure of everything, but they just have a gut feeling of what right and wrong is, which is all you really need. And then you just follow your instincts from there, as long as they're good ones. That and not that I'm not super pro-Trump, or I'm also not against Trump or anything, but I do see as very positive the American society has made some very important basic moves back to sanity. Not really in the monetary sphere, not really in the financial so much or at all, but just in terms of, children's rights, which I see as the most important thing. I remember hearing that I forgot what it had, some weird name, but they were in charge of gender affirmation surgery for a bunch of minors in the country, and they decided to suspend operations. These kinds of things are positive, and a small move back in the direction of sanity, even in the most basic issues, can wake up a lot of people and take them out of a spell. So we're talking, what I'm saying is, like, the people that they were kind of woke and they were like, yeah, men and women should be equal, whatever they're thinking to themselves. And then they suddenly realize that children are being mutilated and they kind of snap out of it. So I think we're getting those people now. And as we head more into the hyperinflation, we'll get more and more of those people that are realizing that this is all fake. They won't be able to explain it to you, but it will awaken some kind of visceral emotion in most humans that aren't completely gone, that this is all wrong. Just like, like a lot of Nazi soldiers at the end of World War II, once the Russians had completed their invasion and the Americans were right there, and they were like, okay, what is this? What have we been doing? It's like the waking up from a nightmare. That's going to happen in America. And I'm not making any equivalent. I'm not calling Americans Nazis at all. No, not anything like that. I'm just saying everyone's under some kind of nightmare, including ourselves. And though we're aware of it, we're still stuck in here. And that's all gonna clear up, and it's going to be messy, but we should be able to reorganize from there in a way that is much more modest and much more honest and a lot safer for all of us.
And if people are interested in learning more, they can go to the endgameinvestor.substack.com. Link in the description there, right next to your name there. If our viewers are interested in that, what will they find there?
They will find, first of all, a lot of monetary philosophy, understanding the nature of money and why it is the most liquid commodity in an economy. There's a lot of articles that I've written that are specifically on that topic, and that's really what I want to hammer home in people's minds, that once they understand that they can't get tripped up. I focus a lot on the mechanics of how crashes unwind, which is what I wrote about a few days ago, and also the gold and silver markets, like most other people in our space, and the metrics that I use, and the strategies that I use for trying to time the next crunch and what to do about it. I think it's going to be sometime in September now, judging by the amount of repos available and the amount of bank reserves available. So I try to time that and triangulate and get people prepared if they want to play that short or long, certain different options. So I do all that, holistic approach.
Fantastic. Well, Rafi, really appreciate your time today. As always, thank you so much, and God bless.
Thank you, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for August 4th through August 11th, 2025, while supplies last. First this week, backdated 1-ounce Canadian silver maples are just $2.89 over spot, the lowest premium we've seen on maples in years. Next, backdated 1/10-ounce Platinum Britannia are only $34 over melt per coin. Backdated gold 1-ounce Britannia are just $59 over spot per ounce. And finally, 100-ounce Pamp silver bars are only $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.